All right, hey everyone, this is Jack and welcome to your futures update. So I have crude up here on the right hand side on an hourly chart because in my eyes I feel like it is primed and ready to go. We have some pretty good structure here and a very good looking larger time frame series that we're going to take a look at. But a little bit of consolidation here, and then on the quant pivot levels we're kind of right back into the area of the midpoint, and we are squeezing on the hourly. So this is all beneficial if you're looking at the larger time frames. So let's take a look at the daily, and this is the best looking one out of the series of larger time frames, but we still have a high compression on a 3-day chart. Either way, you have a squeeze on the daily time frame firing, or at least letting go of one level of compression, which is the red dots to the black dots here in the upward trend. So I really think that crude is about to make, well, I mean, it's already continued to make its move since April, but to really go back into the highs, at least into this tree line here at 124.60. On a weekly time frame, it doesn't really give you too much, but the 2-day and the 3-day, the 3-day has a high compression with 10x bars that looks pretty good, but I know it's a 3-day, so it just kind of gives you those wonky looking wicks there, but it is strong and it's still structured, and I still like the idea of energy continuing to go higher as we walk down valuations across the stock market. And so daily chart on the NASDAQ looks terrible. We did have an OPEX closing Friday, so on the S&P that means it goes right back into our OPEX at 3,900, and that was, you know, a very interesting close, to say the least, to see the rally there for 2 hours go back into 3,900 from 3,800. So a 100-point move in a span of 2 hours to close out the Friday. But what does this all mean? Well, we'll talk about it on Monday, but what I'm expecting is another nasty Monday. And I'll be paying attention to the Sunday night overnight high to see if that's where I want to talk about a short, or at least start my own short position to see, you know, 8:30 might be a little too late as the market opens there Monday morning. So we might have a pretty wicked overnight move, and I think I'm going to try to be short unless there's something else I'm seeing on Monday that kind of, or Sunday night, that kind of gives me a different idea. But right now, that's what these videos are all about. Whenever I do this on a Friday, I'm talking about the Monday market and considering, you know, where we've been through the entire week now. So, you know, obviously whenever you zoom out of a 1 hour chart, you're going to see, well, we had a little bit of a blip around the 18th and 19th, and here we are on the 20th, trading sideways a little bit with the occasional selling. So another air pocket to short, quite possibly, similarly to what we've seen, you know, other air pockets throughout the previous week. Here's one for you, another one. Here's our most recent one, and that was Thursday. And the question is are we going to go right back down? And if we do go back down, what makes sense as far as like levels to be looking out for? And I've got 2 of them for you on the S&P, and that is 3,600 on the S&P and 3,400. And that's based on the 2020 pandemic high and low. Yeah, it's a lot of time. In fact, it's so much time we can't even see it in this chart, but you can see it here. So, you know, through the pandemic, it was like, well, they turned on the printing machines and they just kind of let it go wild. Well, real easy to catch a bull move there in 2020 and 2021, right? Well, now what happens if they hit the reset button? And it seems like they're doing that. So the next possible target is the previous highs going through like mid 2020, and that's 3,500, and then below 3,400 we're pretty much staring at you know, I mean, it's really odd how quick this is happening, because it is definitely a quick change. But what I wanted to do was show you one of my Fibonacci's from the previous low to the previous high, just to give you an idea of like what is the extension that we could be aiming for outside of the one that we just made, which is the 618, and you can't really see it that well, but it says 3682, and it's essentially this dark blue line here. All right, so 3682, that's my first target, and that's going to be next week, and that's the worst case scenario if things get uglier and the selling just continues, right? And it doesn't have to necessarily be Monday, but I, you know, try to give it a shot. I mean, it makes sense, but this market's so choppy, and we are in the middle of a few different waves of trading a little bit more, just not so directionally lower, but really wide ranges. So if you're wanting to short the overnight high Sunday night, I'm there with you. I like that idea. And just to keep in mind, you know, we are past May monthly expirations. All the things that kind of needed to clear out gives us one more week left in May. And is it still sell in May and walk away or run away? Or do we start to at least find some type of footing here around 38 or 3900? I don't think that's the case. I think this is going to still continue and really surprise us. But we'll leave it up to anyone here until Monday, and we'll see what makes the most sense. So with crude having a nice setup to the long side, you would think it would still benefit if stocks just got completely crushed. And you can see the dollar index here on a daily chart taking a little bit of a breather, but that's kind of the could very well be the end of its breather. And this is very systematic selling. It's not like, you know, you were watching the VIX pop every time you had a sell-off here today. It was very methodical, very long-lasting, and so I wonder if we're going to continue to see some of that and look out for maybe worse conditions than just controlled selling on Monday. It's been wild. It's been weird. I think that there's, you know, if they're going to continue to do this, we're looking at a pretty close to 3,200 to that 2020 pandemic area. And then from there, it's kind of entertaining. It's like, well, do you want to try to entertain to buy the dip? But buying this here and having more long-term long positions just absolutely just doesn't make sense. Though if you do catch a bounce, you know, consider yourself, don't want to say lucky, but if you know, if you catch a bounce, have a plan to take that money off the table there. You know, the other things that I've been talking about as far as stocks and other smaller stocks that have already gotten beat up, it's just you're looking for another opportunity to short this. If we are going to eventually fold back down to about 3,500 or 3,400, that's what you're looking for. And so that's what we'll be looking for on Monday. All right, have a great weekend, and we'll see you in the next update.
Thanks for watching this video. If you've enjoyed the video, be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. Good trading, and we'll see you in the next video.